The truth is that especially when we start getting into your assets that you've saved up, you have a lot of flexibility around when and which assets and how much tax you're going to pay. Hi, my friends. This is Colin Richards. I'm president and founder of Lord & Richards, and we're continuing a discussion in this segment of the Lord & Richards show about financial life planning. Not simply estate planning, although estate is what you own today, but not just simply end-of-life planning, but the planning that we're going to do while we're healthy and while we're alive to, first of all, avoid those marauders and to steer them away from our gates at the end of life, but also during life to avoid paying money and giving up money that you really don't need to do. And one of the number one benefactors of your living estate is the government. They want their taxes. And within the realm of the law, my goal for you, for my clients, for myself, is to pay what we owe and not 1 cent more. And so for that, we need to understand the law, and we need to have the tools at hand and the skills developed to avoid overpaying taxes. Now, let me start with a principle. The principle is this: the best way to pay taxes, because we're all going to have to pay them, right? Two things that are certain: death and taxes. The best way to pay those taxes is on your terms, meaning you determine the time and the dollars that are going to be taxed, and at the lowest possible rate. You say, can I do that? You know, every month I get my paycheck and it just gets sucked out. Well, actually, you've made a decision there that you're going to pay taxes every time you earn a check, right? But you could wait till the end of the year and just pay them when they're due, but you'd have some penalties, right? So you've made a decision that it's in your best interest to have those taken out. The truth is that especially when we start getting into your assets that you've saved up, you have a lot of flexibility around when and which assets and how much tax you're going to pay. And let me give you an illustration. Some of you are, for good reasons, prepaying your mortgage. You're paying it down early, right? Maybe 20 years ago, you were young and you bought your house, and now you're just eager to get that debt off your back. Nothing wrong with that. I would say that's not always the best use of your free cash flow. If you think of your life from a business perspective, you want to maximize the return on your investment, and paying off what most people have today, which is a very low rate mortgage, might not be the smartest thing to do. But let's say you've decided to do that for reasons other than simply math and science. You're doing it because you just like to be out from under that debt. So you write in an extra amount, send in an extra amount each month to pay at your own pace. Nobody's holding a gun to your head, but you can pay it when you want it and the amounts that you want. And because you know the rate that you're paying off, you know what you're getting back in return. You're paying off your mortgage early so that you can save a ton on interest later. And all that prepayment goes to your principal. Well, it's the same with taxes. Think of taxes not as an expense simply. Think of it as a debt. Once you have money that you've saved up and you have not yet fully paid taxes, all the taxes that could be due both now and in the future, you have a debt. And so let's say you have an IRA of $100,000. Wouldn't that be wonderful? An IRA of $100,000. And by the way, whether it's $100,000 or $10 million, it doesn't matter. The key here is this is money that has not yet been taxed, right? You bypassed the tax man, put it in an IRA, and you deferred that tax till a future time. Guess what that is? That is a debt, just like a mortgage, and it's going to have to be paid. But here's the interesting thing. I want you to think of it as an adjustable rate debt, right? Depending on what the tax rates are in any given year, depending on where you are in those tax rates, right? How much income you earned that year. Are you in the lowest bracket, the middle brackets, some combination thereof? So depending on the time and depending on the rates and the decisions of government, you're in an adjustable rate note with the government. For most of you, you've never really given this much thought. I realize there's better things to think about, like enjoying life. But this is where our help comes in at Lord & Richards, because every day we're sitting down and doing a detailed study of your tax situation, not just right now, but what you could be facing in the future. And here is the goal. The goal is to help you time, so not just the right time, but also help you determine the amounts to go ahead and pay down some of that debt early so you can avoid taxes, basically to pay a lower rate, just like you're doing on that mortgage. So taxes are a debt, but they're a debt with an adjustable rate. Our goal at Lord & Richards is to educate, empower, and assist you in paying the lowest possible rate. That's the best time to pay your taxes, when they're the cheapest. Now, what kinds of taxes can we face in the future? We know about income tax, but what are the ones that could be lurking over the horizon? Well, for our ultra high net worth individuals, people who've really amassed a great deal of money in excess of, let's say, $28 million, okay, if you're married, you have an exemption up to about just shy of $28 million for you and your spouse, so that you don't have to pay estate taxes or death taxes. These are the onerous taxes that can wipe out half of your entire net worth on death. You absolutely need to be prepared if you're a high net worth individual. And so we're going to help you. We're going to help you if you're exposed to that. That's something Lord & Richards is comfortable addressing and resolving with you. We have tax specialists on hand. We have our own tax preparation service, actually, Lord & Richards Tax Services. We have attorneys. We have access to the finest and most sophisticated tools to help you if you're exposed to that tax, the estate tax. And if you're not sure, come in and visit with us. We'll let you know what your exposure is. Many of you think, oh, I don't have that now. But the question is, will you have that much later? And we can help you project that and prepare in advance to avoid wiping out everything that you own. This is the first and most onerous one we want to address, and then we're going to move down from there, because a lot more of us are going to be affected by the other taxes, and we're going to address those in future segments. But right now, I want to encourage you to sit down with us for your retirement freedom review. You're going to walk out of that 1-hour meeting with a new sense of peace of mind and certainty about the future. It just starts with a phone call.